What's up? Let's get into this advanced market structure video, guy. This is a long overdue video. It is the basis to all trading, okay? This is the roadmap I believe all your trading should be based off. Let's just get straight into it. So, 3 types of market structure. We have an uptrend, we have a range, and we have a downtrend. A lot of people think it's this simple. We just put in a higher high, a higher low, a higher high, higher low, higher high, higher low. This is how I used to think the market moved. Let's be real. If it was this easy, everybody would be making money. It would be really simple. Downtrend, we think the same thing. Lower high, lower low, lower high, lower low, lower high, lower low. Again, if it was this easy, we'd be making a lot of money. Now, this is the basis of how the market moves 100%. There's a lot more layers into it that we need to go over. And this range environment here, for now, I'd put this in a different video. Don't trade the range, okay? Unless you know the range trading model, ignore this. We want to solely focus trading uptrends, trading downtrends. Let's dive into that. Now, this here is a lot more accurate representation of how the market actually moves. Let's break it down into simple terms. We have a break of structure here to the upside. This break of structure, right, needs to be a candle close above this high. It cannot be a wick. If it's a wick, it doesn't count. Now we want to look at the lowest point between this high and where we broke it. That would be this point here. This makes this the external low, okay? This is the strong low. This area here, this is the low that puts in the new high. This is the low that needs to get respected. All of this is internal. We aren't too fussed about it. This here is just another internal break of structure. Now we have this external strong low. We can see it puts in this new high up here. Now, what a lot of people get confused is everything between this external low now and this external high. In an uptrend, our highs are weak because we're expecting price to put in, right? If we go back to this first diagram we had here, we're expecting price to put in higher highs and higher lows. So these highs are continuously being broken. So when we go back to here, right, this is a weak high because we're expecting price to run it, which we do exactly that. But what do we do before here? Where do a lot of traders get caught out? It's in this chop between this low and this high. Everything between your external low and your external high is internal. So as we break to the downside here, this is not a break of structure. This is not a change of character. This is a internal break of structure. Okay. When we then break this low here, this is not a change of character. We are not thinking downtrend because this is our external low. As long as this low holds, this is the low responsible for putting in this high. We're still in an uptrend. This is a what? This is an internal change of character. It shows you that we're expanding. This is all confluence. We are pulling back. But it doesn't mean the trend is over. It means we are pulling back before this expansion higher. It's the exact same as this pullback here, right? We expand, we pull back, we expand, we pull back, we expand, we pull back. It's the exact same as this pullback, expand, pullback, expand. It just looks a little bit more complicated. And when we close above this high, that's another internal change of character back to the upside. And what happens here? When we close above this strong high, that becomes what? That becomes a break of structure to the upside. So this was our high. This was our break structure. Where's the lowest point between this high and where we broke it? It is here. So now where becomes our external low, our strong low? This is the strong low we expect price to respect. Now, if we draw it out right, you can see we focus solely on the external structure. You can see we have high, low, high, low, high. Okay, now, is this, right, this blue here, not the exact same as this? It is. But on the market, it just looks like this black. So we need to know, apologies, we need to know what we are looking at. If you get caught up in this internal range, you're going to think downtrend, get smoked, downtrend, get smoked, uptrend, get smoked. You need to know your external from your internal. So that's cool, but now let's get into exactly where we want to take a trade from and how we look for a trade entry. Put in that high. Okay, we put in that higher low. Then we put in that higher high. So we're expecting a higher low and then a higher high. So the point of demand that put in this higher high is always the previous range. So it's between this high and this low. This was the previous range before we got the breaker structure. Now, what's important is inducement, liquidity. Different words, exact same meaning. We can't trade without inducement. You can't trade without liquidity. Can you see here we have these lows here, right? This is all inducement. This is where people are going to think, they're going to try to catch this higher low, okay? They're going to try to catch it here. They're going to get stopped out. They're going to try to catch it here. They're going to put their stop loss here, okay? So that's inducement. Some people are going to buy here thinking this is the higher low. They're going to put their stop loss here. This is all inducement. Now, how do we avoid this inducement? How do we make sure we're not part of this? Well, the first step is we don't take a trade until we sweep inducement. That way, we can't be the inducement that gets swept, because I'm not going to buy here until now we sweep this inducement. Okay, you need to wait for the market to sweep that. Then you can look for a trade. Another thing as well, right? Classic market, right? You know, you've probably heard this advice when you're 5, okay? It's the most basic thing in trading. You buy low, you sell high, okay? So when you go to a store, right, if you're buying something, you want to buy it at discount. When you're selling something, let's say you're reselling something, you want to sell it for a premium. So you buy low, you buy in discount, you sell high, you sell in a premium. So in this scenario, am I looking to buy or sell? Well, structure, the context, we're in an uptrend, we want to buy. Now I know I want to buy, I want to make sure I'm buying low, I'm buying in discount. So all you can do literally is draw a fib from this strong low that we had to this weak high. Okay, like we represented here, this strong low to this weak high, okay? It would be the same thing here. Okay, we want to buy in the green, we want to sell in the red, we want to buy in discount. So I'm not willing to buy unless price gives me discount prices. So for me, this is the 618 level. Okay, I'll go into that when I go through the trade recap later. So once price sweeps all this liquidity, okay, we tap into this area of demand, right? This strong low that puts in this new high. We're in a discount. This is my confirmation here, right? This is the area I'm going to look to take a trade to rise price to the upside. Now I'll go through a detailed trade recap of a trade I took on live with my members literally today, this morning, a couple hours ago, using these exact concepts we've learned. And as a bonus, we're going to include some multi-time frame analysis. On the chart, it's going to look a bit more complicated, but it's the same thing. We put in a low, we put in a high, we put in a lower low that now creates a higher high. This here, right, in a downtrend, we should be putting lower highs and lower lows. So once we candle close above this, this is a change of character to the upside. So now we can start looking for buys again. We're expecting higher highs and higher lows. So I draw a zone across my previous range. We were previously trading between this high and this low, right? It's like this example here. This was our previous range, then we got a breaker structure. So this was our previous range, then we got a change of character. So now I draw a zone from here to here. What am I looking for? Okay, what was the same thing first? I need inducement. I need something to get swept. We have all these lows down here. So once we sweep this, this is the area where I'm then looking for buys, a continuation with the trend higher. A lot of people are going to have their stop loss here. They're going to see this is a change of character. They're going to get absolutely smoked. So this area here is where I need price to get swept, and then I can start looking for longs. Okay, so now on the lower time frame, price swept that higher time frame low we were talking about, and now I'm looking for continuation to the upside. So now my higher time frame is bullish. I'm looking for a lower time frame trade, and I can see the same thing right we have here. We're waiting for a break of structure. We have a break of structure here to the upside, okay, between this high and then where we candle closed above it. Okay, now what do we need? We need liquidity. We need inducement above this zone. We need to fake people out. we have these lows here, right? People are going to put their stop loss here, thinking that this is the change of character. This is no, this is internal, okay? This is between this low and this high. Everything is internal, because this is the low that puts in this new high. This is our strong low. This is where we need price not to go below. So as price expands, what am I going to do? I'm not going to enter until what? What was the final step? We need to buy in a discount, okay? We need to make sure we are buying in that discount area, this green area. I'm not looking to buy all the way up here. If I was in a sell, then I want to sell in this red area, right? When we go down with the trend, right? Then I want to sell in this red area here. Okay, this is where I want price to tap into, look for sales, but I'm not. I want to buy because Y structure is bullish. So I want to buy in a discount. So I only want to buy in this zone here. What did I say earlier? 618 fib. That's my little secret trick, right? That's where I like entering. So this blue line here is my 618 fib. So guess what? As soon as price touched into here, that is the entry. That's where we got tagged in. Now, where's the stop loss? The stop loss is going to be your strong low, because as long as price is in an uptrend, we should be making higher highs, higher lows, respecting these external strong lows. We need to know where our external lows are compared to our internals. If I pull it at these internal lows here, I'm going to get faked out. I'm going to get stopped out. This is just the inducement we wanted. Now, my take profit is going to be where? It's going to be this high here, because we're expecting what? We're expecting a higher low back into a higher high. Once I place the trade, that's it now. All this internal movement we get, you don't want to overcomplicate. You don't want to think about. All we should know is price should respect this low. Price should put in a new high. Do we do that? It took a minute, but surprise, surprise, we do exactly that. Okay, so now let's uncomplicate it. Can you see all we've done now is put in a high, a low. A high, where's the lowest point before we broke this high here? This strong low here. And then what? We put in this higher high. Now, everything between this high and where we broke it here, right? All of this is internal. If you're trading this structure as your bias, you're getting smoked, okay? We're doing the exact same thing as we originally did. We're putting in high, sorry, low, high, low, high, low, high. Just know where to look. Now I'm going to look for buys anywhere between this low and where we put in a new high, looking for the same thing. I'm looking for a zone. I'm looking for an area of demand. I'm looking for liquidity. What else am I looking for? I'm looking to buy in this discount area, okay? Boom, I get that criteria, I enter my trade, I look to ride price up. If I get stuck in this internal structure, I'm getting smoked. Now, this was a basic description of advanced market structure. Sounds weird, but it's true. Okay, I was trying to go through it as quick as I can. But this is literally how I trade the markets every single day. This is exactly how I teach all my members to trade the markets every single day. Now, as proof, this is the trade I took in London, right? It's the exact same one we went through. Had my zone, had my liquidity, entered at the 618, and simply just rode price up. That's not a flex. My flex is watching students learn the exact same thing and most importantly make money from it, right? They're literally seeing the exact same trades and catching them, doing the exact same analysis I would. We're just using market structure, using liquidity, using our entry model. So if you want to join the Discord, it's completely free. If you want to join the premium side, there is a small cost. It's completely up to you. Also, please be aware of scammers. If you do join, okay, a lot of people are getting scammed. I will never DM you first. Please check the username. I'll never tell you to join some copy trading website or send me some sort of money or sign up to everything. So please, please, please don't get scammed. Apart from that, have a good day.